How Elon Musk lost billions overnight. Elon Musk, the CEO of Tesla, recently lost billions of dollars after Wall Street experienced a bloodbath following the release of higher-than-expected U.S. inflation data. According to reports, the headline consumer price index increased 0.1% in August and was up 8.3% year-on-year. According to the Bloomberg Billionaires Index, Musk's net worth dropped by $8.4 billion. According to reports, all three major U.S. stock indices, Dow Jones, S&P AMP, and NASDAQ, fell to new lows after experiencing their largest one-day percentage drop since June 2020 following the COVID-19 pandemic. This week's market performance included 4-day winning streaks which benefited investors. The Dow Jones Industrial Average fell 1,276 points, or 3.94%, to 31,104. The S&P 500 dropped 177 points, or 4.3%, to 3,932, and the NASDAQ Composite fell 632 points, or 5.16%, to 11,633. The S&P 500's 11 major sectors all finished the session in the red. Other top billionaires lost more than $4 billion, including Mark Zuckerberg, Larry Page, Sergey Brin, and Steve Ballmer. According to Bloomberg data, star investor Warren Buffett and Microsoft founder Bill Gates lost $3.4 billion and $2.8 billion respectively. Except for the month of July when the markets bounced, U.S. inflation has been wreaking havoc on the market since the first quarter of 2022. In the United States, inflation rose to 9.1% in June from 8.6% in May before falling to 8.5% in July. According to global market experts, while the U.S. CPI data may show a dip in the coming months, core inflation will continue to be a concern for economists, analysts, and investors. In the meantime, there is little doubt about what occurred in the crypto and traditional markets. The 8.3% inflation figure disappointed investors across the board, increasing the likelihood that the Federal Reserve will maintain its hawkish rate hike pace, causing assets to sell off. According to a CoinDesk report, annual inflation fell from 8.5% in July to 8.1% in August, which was less than the 8.1% expected. Inflation figures were also disappointing month over month, with a 0.2% decline predicted versus the 0.1% increase that occurred. Fed officials have reaffirmed their commitment to containing inflation, which is near 4-decade highs in recent weeks. They now have more evidence to support their claim. The reaction of investors to Fed actions is a developing theme that could shake already volatile asset markets. Even if a 100 basis point hike was floated, investors' expectations for a 75 basis point increase have remained consistent and are likely to remain. Neil Dutta, head of U.S. economics at Renaissance Macro, wrote in a research note following the release, "Inflation remains hot, financial conditions have seen some improvement, and the labor markets are humming along." He then added, "If the goal is to slow things down and create some pain, the Fed is failing by its own standard." Inflation was higher than expected in August, which was unwelcome news for President Biden, who has tried to defuse Republican attacks on rising prices in the run-up to the November midterm elections. Throughout the summer, Mr. Biden and his aides have celebrated falling gas prices on a daily basis. They have helped to moderate inflation from its peak earlier this year, but not enough to offset rising rent, food, and other prices last month. Despite acknowledging the pain of rapid price increases throughout the economy, Mr. Biden has claimed progress in the fight against inflation, including the signing last month of an energy, healthcare, and tax bill dubbed the Inflation Reduction Act by Democrats. On Tuesday, he attempted to spin the August data in a positive light, calling it evidence of more progress in lowering inflation. Mr. Biden said in a statement released by the White House, "Overall, prices have been essentially flat in our country these last 2 months. That is welcome news for American families, with more work still to do." However, polls show that inflation is hurting Mr. Biden and his party as Democrats seek to keep control of the House and Senate. In national polls, it is the top issue for voters, and Americans say they trust Republicans more than Democrats to handle inflation and the economy as a whole. However, this feels like a familiar situation for the Tesla CEO. Elon Musk, the founder and CEO of Tesla, lost $10 billion in a single day in May after allegations of sexual misconduct against him surfaced. According to the Bloomberg Billionaires Index, he was worth approximately $212 billion at the time. According to the index, his wealth dropped to around $201 billion after the allegations surfaced. According to Insider, Musk aerospace company SpaceX paid a flight attendant $250,000 to settle a sexual misconduct claim against Musk in 2018. Musk has denied the assertion. Musk owns approximately 47% of SpaceX. The company's valuation was estimated to be $125 billion last week. However, because it is a privately held company, its valuation is stable from day to day. However, Musk's sexual misconduct allegations and subsequent financial fallout are just the latest incident in a long series of incidents since the beginning of the year. According to Bloomberg, he is now more than $69 billion in debt year to date. This is due in part to Tesla's stock price being dragged down during a global stock market sell-off as investors worried about the health of the global economy, but it's also possible that Tesla's investors were thinking about key man risk or how the actions of one person can have a negative impact on an entire organization.